Yeah, how are you guys doing? Today I'm going to be showing you guys how to use some indicators here properly as a trader. And this is what some people find difficult using. So on this aspect of episode, we're going to be discussing more on technical analysis. And on this technical analysis, there are tools we use as a trader that most of you might be finding confusing on how to use. So these are the tools I'm going to be showing you guys. So as you can see my cursor to the left hand side, which is on your right hand side if you're viewing the picture, you'll see that from this side we have these two, right from the cross down to the delete point. So, and I'll be explaining one by one what these tools are meant for relative to my strategy. Okay, so because as a trader, if you're trying to use Tradingview and you don't know what Tradingview is for or it stands for, you might be very confused on how you can be able to analyze your charts. Okay, because one thing that makes you a trader is your ability to analyze the market. And if there is anything that happens that you cannot analyze the market, then it is a confusing thing for you to know exactly where to buy and where to sell. So here today, these are things that I'm going to be showing you. Then we'll start from number one, which is this cross. So this cross signifies these things you see here. So you can change it to dots. So if I want to use cross, I can use cross to just notify exactly, okay, where the things I need to work with. Then when you look at it, we have different types of we have the dot, we have the arrow, which is the cursor, the one we know. Then we have erase. Erase simply means you cleaning off. Let's say I'm using this. I just wrote something of this nature, then I want to erase. I can go back to that place and click erase and simply okay, I think the erase is not working on this, but I'll show you guys the one that erase work on. But at this point, let's move on. So we have what we call the trend lines. Then on that trend line, when we click by the side, we'll see that there are a lot of trend lines that are available for us here. And according to my strategy, I use just one, two, three, four, five. Only five trend lines I use. And I have reasons why I'm using the trend lines according to my strategy. So if there's something you want to learn, find number one trend line is this, is a line trend line. So this line trend line, you can use it as you trying to know. Okay, let me give you an example on how you can use it as well. So these are how I use my trend line. So number one, I use my trend line for break of structure. And two, I use my trend line for notifying where the highs and the lows in the market is, which is this one you see here right now. And you also see it down here. So though this one is having a dash, but I can make it just a tick line. So this is what you see now. So if I open the trend line again, you'll see that we have the one we call ray, and array, you can use it to trace a long trend line that is very, very long. And we have the info line. The info line is not just the same way with trend line. I'm the one that deleted it. So if I'm to show you guys the full info line of trend line, this is how it looks like. Okay. So within this info line of trend line, sometimes it is used to know exactly the 60 degree of everything you're trading, or the 100 degree, the 360 degree, you know, because everything we're doing here is based on mathematics. But I'm not saying that you're coming to solve mathematics in forex. That's not what I mean. So I'm typically showing you how to use your trading view as a technical analytics trader. So this is how it is made easy for us to use this tool to properly analyze our markets. So going to the next side, we have an extended line. So extended line also works like the same way like the trend line I've just shown you guys. So you can see how it plays out. You can also delete it. Then coming there again, we have the trend angle. So this trend angle, I don't use it. This is how it looks like. This is how the trend angle looks like. So you are able to just measure 180 degree to maybe 90 degree to 105 degree. You know, these are things you use and measure. And let me tell you guys something. It is not a must that you have to use all these things I'm showing you guys, but I'm trying to let you know what they are used for and when they are being used. And one of my favorite trend lines I usually use is this horizontal ray. So when you look at the horizontal ray, sometimes whenever I'm targeting let's say I'm on a trade and I'm having my targets above maybe my above where I want to get out from the market. So it helps me to know exactly, okay, where will I be getting out from this market, or where exactly will I be holding my trade, or where exactly will I place my stop losses. So sometimes it helps me, despite I might be using other things to be finding my stop losses and other things. So, and again, is this vertical line. So this is what we call vertical line. And for me, one of the things I use my vertical line for as a trader is to know exactly the dates, because sometimes I get confused about the date. So when I click it and look at the down part of it, you see that where my date is right now is on Friday 16th August of 2024. So it makes it easy for me to also try to backtest. Backtest is me checking the old datas of what the market has done. So with this, I can know exactly where to backtest from. So this is why I used, or what exactly I used my vertical line for. So coming to the next part is what we call Fibonacci, and most of you might be conversant with Fibonacci, or most of you might be familiar with that name. And Fibonacci is one of the strongest tools in forex trading markets. And why? Fibonacci is used to know where our 50% zone is. And listen, as someone who is going into trading, Fibonacci is one of the two you don't want to miss, and you need to know how to properly use them. So, and most people have been using it wrongly, and I think in my other video I'm going to be discussing about Fibonacci in a very well detailed way, so that you understand how to properly use Fibonacci. So this is how actually this is not how Fibonacci looks like, but for me this is how I usually use it. So this is exactly how Fibonacci looks like. So when you look at it right now, we have from the 400 something down to zero part of it. Okay, so and I'll also show you guys how to properly set your Fibonacci to a way that it will be simple for you. Okay, yeah, so let's delete it. Maybe in our next video we'll be talking more about it. So mainly what we use Fibonacci for is to notify or to get to know where our 50% zone is. And mostly most people also use their Fibonacci at the point of 70%, 60%. These are when the price is on discount area, and this is something we're going to be discussing. So in the next phase, we have the gambles, the one I love using. It is also used for me. I also use it for notifying where my 50% is, but I don't find it as something too smart that I'll be using. Yeah, so all these things, all these tools you see here, they are actually serving different purposes. They are serving different purposes. But one of the tools in every tools department that I'm using under Fibonacci, I use Fibonacci retracement, and I use what we call a GAM box. This is what I use. So coming to these patterns. Now, this pattern, this is what we call technical strategies in analyzing the market. Like some people use it to analyze the market, according to their own strategy. But for me, I don't use them. I don't use them because my trading style is different. So there are ones we call the Elliott triangular waves, the Elliott corrections, the Elliott impulse, and XABC pattern, cipher patterns, head and shoulder. Head and shoulder is something we are familiar with, right? It's something we are literally familiar with, and it looks like this: head and shoulder. I don't know if I properly drew it well. Let's try again. Head and shoulder looks like this. It looks something like this, and like this. Yeah. So this is what we call head and shoulder. So this is the left shoulder, this is the head, and this is the right shoulder. So, and some people, whenever they see such kind of maybe such kind of pattern, trust me, they are ready to start shorting the market. They are ready to start selling. But for me, I don't use these patterns. So I'm just trying to show you the technical tool we have and their purposes and what they stands for. So coming to this phase, this is projection phase. And under projection phase, we have the long positions, so and the short positions. So I'm going to be bringing out the long positions and the short positions the same time. So this is the long position, right? And this is the short position. Now, when you look at this image, they have the same color but different directions, right? So this is what we call the long position. Now, when the market is trending to the high side, let's say you're on a bullish run and you want to know where to fix your stop loss, where your entry is, and where to exit. So this is the tool you want to be using. Okay, this is the tool you want to be using. So pardon me. So let's take for example right now. Let me clean up this so we have a very clear chart. So let's take for example, I was able to spot a trade from here. Okay, then what I'll be doing is this: I'll pull up my long position and place it exactly where I spot the trade. Then I'll place my target above where I want to get out from the market, right? So let's say this is my trade. Okay, so at this point I will say that I'm trying to place a trade from this zone, where this zone is right now, and I'm trying to exit from here. So what I have to use is a long position. Why will I be using a long position? Now when you click the long position and you look at the extreme end of this long position, you see that this red is showing exactly where you don't want the market to take your money off from. Okay, where you want the market to exit you if you are wrong. So in this place right now, where you see this color of gray, is where we are entering the market from. Then the green one is where we are targeting that the market will give us our profits. So this is what long and short position stands for. Okay, so most of the traders like the USA and other regions, when they want to tell you buy, they will rather say go long, right? Then when they want to tell you to sell, they will rather say go short. So, but they represent buy and sell positions. So this is what these things are used for. So coming to that projections as well, we have our forecast. Trust me, I've never used forecast before and I don't know exactly what it is used for, but for this long and short position is something I always use, almost, in fact, every day, not even almost every day. Okay, so we also have the bar patterns, we also have the coast feed, the projections, and according to the volume base, we have the volume base, and most of the traders usually use volume base, and I see it as for me, I don't know, but most of the traders, why they use volume based is they want to see a signal or an indicator that will show them, oh, okay, we're ready to sell or we're ready to buy. And before I was actually using them, and the only volume base I always use is what we call a fixed range volume profile, excuse me, a fixed range volume profile. And this is how it looks like. So sometimes what I do is I'll just pull up the fixed base volume bar from this zone down to the lower side. Then I'll just click OK. So I think it's not showing. I forgot how I used to use it then, but it was very, very interesting for me then. Okay, I'll just take it from the low down to the upside. Uh, I'm confused at this point. I don't know why it's showing. Let's go to lower time frame to know if we are able to use it from the lower time frame. It literally shows you where the market has consolidated the much. Yeah. So I think because we are on higher time frame, that was why. So it literally shows you where the market has consolidated the much and where there is more chances that the market is going to fill up liquidity and move to the other side. So this is what they usually use this volume base. I think I'm mentioning the name well. Okay, fixed range volume profile. So this is what it is used for. So how you can use it is this. I don't want to put you guys in confusion. So this is how you use it. You pull it up from the high then to the low where the market is currently trending. Then you leave it. So as soon as you leave it, I don't know why it's not working here. Okay, I think you literally use it on the current trend, which is something like this, right? Yeah, yeah. Okay, it works. So we literally use it on current trend, which means if I'm to use it from anything back below, it is not going to show except our current trend. Okay, so trust me, I was using it before, but I was not really getting to know what it's used for properly. Yeah, because when you are in this stage whereby you're trying to discover your strategy, you're trying to discover what you're good at, definitely you'll be testing up everything in this toolbar, and you'll be testing and testing until you get to find your edge. So don't get me confused. I mean, sorry, don't let me not get you guys confused. I'm trying to like help you out on the toolbar and how you can properly make use of them as a technical trader. So under this one we have price range. Price range is one of the best tool I always love to use because it shows me the amount of pips I'm risking, and it showed me the amount of pips I'm also targeting. So for those of you that don't know what is pips, try to note it down today. I'm also going to talk about pips. Pips is price in percentage, and it's something that I'm also going to teach in our next video. So this is how I use my pips in percentage. So when you look at this down part, this is where I highlight them and tag them and make sure that they don't go off. I don't start searching for them. So when I click for pips, this is a range price range. I'll just leave it and get it to the high. So if you look at this number is literally telling me how much pips I'm risking or I'm targeting. So when you look at here, we have 1,204 pips. That's a lot of pips because if you take a trade from this zone, okay, let's assume that we are taking a trade from this zone and we are exiting here. As someone who is trading gold, this is a lot of pips. This is a lot of pips. Like you're making a hell of money from this. So this is how we use our price range. So when you get to see your price range, though with this short and long position, you can literally tell where your pips is as well, because when you look at here right now, here is showing specifically that this is 12 point something, and which is okay, here will not properly show, but for me I will just use this range to calculate. Okay, I'll check how much pip am I targeting, and I'll also calculate how much pip am I risking. This is good part of price range. So when you look at here, I'm risking only 12.84 pips. That's what I'm risking from this trade. Okay, so when we take it high, we are targeting almost 1,100 and something pips, which is a very, very huge pips to target. So, and some people read the last number from the path, while some people read the first number, which is 118 pips, right? So when we go down here, you see when we read from this side, we are risking only 11.95 pips. Then when you look at here, it is 1,195 pips, right? So the the best part of you reading these pips is read it from the first place, not from the last place, because the last place is I think it's percentage. No, this is percentage. This one is points. So this one will actually read points. Why this one will read the pips? Yeah. So when we go high, you see that we're targeting 117 pips. So this is how you can use your price range to calculate your pips. Then the next thing on this toolbox is price date range. So let's say you're on a swing trade and you want to know specifically when this trade is going to end or when you're expecting to get out from the market. So date range is one of the tools you're supposed to use. So let's say I took a trade from here, then I'll look into the future. I'll be like, okay, when is this price going to um end or give me profit? You see that here it is telling you that it is going to end within 6 days and 12 hours. So price range help you to know the date, sorry, date range help you to know the date between when you entered and when you are expecting to exit the market. So this is what date range is used for. So coming to this text and notes, one of the best, and I will not say one of the best, one of my favorite text and notes is the one that have only text and callouts. So text, what I usually use text for is this. Let's say I want to know where my high is and my lower low. So let me just make them differently. Let me not put them in just the same toolbar. Okay. So let's say I'll just make them big and remove the box. Okay, let me just remove the box. Let me not wrap it. I'll just remove the box and use capital letter. So I have my highs now. Then if I want to, let's say I want to I want to duplicate it, then I'll click um I'll click command on my keyboard, then I'll drag it to the downside. It will just duplicate. Otherwise, you right click your your mouse, then find copy. Oh, sorry, not copy actually. Then you find a clone. You just clone, which is duplicating it. Yeah. So this is what it is now. Then what I will just do is just change the name to lower high. Okay. So this is what I actually use it for. I just place it here. Sometimes, let's say I want to teach my students, then I'll place it here. Then here I know this is my highs and this is my this is my lower high, not my higher highs. Then I'll say this is my higher low. So this is how I use my text for. This is what I use my text for. Okay. So I also use callouts. So callout simply means you're calling out your trades according to what you saw, and you're trying to make it clarifying to you. So let's say I'll be taking a trade from here. Then sorry, let me call it out again. I'll be taking a trade from here. Then I'll be like, okay, what is the reasons why I took this trade? and where am I ready to get out from the market, and what am I able to be doing when the market is trending, you know. So this is how I call out my trade. And you can also change the colors. For those of you that are female who are traders already, you can change the color of your text. For me, I just want it to be on black. I just want it to be on black. Then I'll just change the background to this color. Yeah, or probably change it to this color. The then the lines will be something like this. Then sometimes I'll just put it white, or just put it a gray color. But I think black is nice because it puts out the real color. So sometimes you can just play with the text, with the boldness, you know. Then we have these. For me, I don't look at into all these things, but it is also okay if you look at those things as well. Then we have the visibility. So let's say you're on a lower time frame, and you don't want it to show on your 4 hours. Then you just click 4 hours. 4 hours will disappear. Then when you go to your lower time frame, like 30 minutes, you still find the call out there. So where is the call out? Where is the call out? Where is it? So this is the call out. So when we go back to 4 hours, we can still, so if we want to make the call out visible on 4 hours, you just double click, then bring it to 4 hours and go back to your 4 hours. You find it exactly where you placed it. So you see how it is working, right? So if you want to delete, you click and delete it from here. So this is a very easy way to use all these tools. Then we have our brush for drawing, brush for whatsoever you want. Yeah, we have the brush sections, and the brush we have is these two brush, the highlighter brush and the brush itself. So for me, I usually use brush to just, basically when I'm teaching people, I use the brush to, like, okay, tell them this, so that they'll be able to pay attention with what I'm doing. Then this brush again is a highlighter. Yeah, it is too bold to compare to the other one, you see. So this is what I use the brush for. Then under this brush section, we have the arrows. So under arrow, I use only one arrows. I don't know if I'm too fast on this, but I think the way I'm doing it, you guys might be catching up. So I only use only one arrows. So one arrows, this arrow which is called arrow, I'll just use it and try to show my students, okay, this, right? So let's say I'm duplicating it, I'll just take it this way, then bring it here again, then I'll say this, So it is no big deal, like it is very simple to use. So not like something too difficult. So under this brush bar, we still have this set of arrows. Then for this arrow, I actually use it to notify exactly where I'll be entering from, or maybe if the market is doing some sort of ways, you can also play around with the colors. I can make this different color. I can just make it this color, or just use this color on it, So any color I want to use, I will try to use it. So we have the one that is going up, we have the one that is going down, which shows like this, and this shows like this. Let me just make it green so that you have similar colors. So this is going up, this is going down. So this is literally what I use these arrows for. Like, not big thing though. So when you open this side again, we have shapes. Now this is the interesting part. So when you look at my shapes, I use almost 1, 2, 3, 4, and 5 on my shapes, right? So number one is my rectangular shape. So coming to my rectangular shape, for those of you who also trade support and resistance, rectangular shape is very much necessary for you, and also necessary for us that trade smart money concepts. So what I use my rectangular shape to do is to map out my supply and demand zone. So let's say right now that I'm having a market that just break a structure, Okay, so letting me know that I'm about to buy from this zone. Okay, so if you look at this down part, you see how I was able to map out my demand zone here, which is the one that is coming here. I was able to map out my demand zone, and the market came and strike there before it moves. So whatsoever the market strike before moving, trust me, the market will still come back to pick that same order, because this is the market that caused the break of structure. So from there will be a very, very good price for entry. So we'll just simply use this our tool to just draw and bring it here. So at that point, this is where I want the market to react from. Then after reacting, it goes its normal direction to give me a buying order. So this is what I literally use my rectangular tool. What's it called? Rectangular tool, or what? I don't know. Yeah, rectangle. So you can call it rectangle. And you can also change the color by clicking the left click and just finding a line to background, and you can change it to any colors you want. So let's say I want to change it to red. I'll just change it to red. So you see how it is now. Or probably I'll just change it to, this is green, right? I'll just change it to green, or I'll just change it to blue. Yeah, depending on the color I want to change. So remember, there are two here. So there is no reason for me using two. I can delete it so you see it properly. So this is what I use my rectangular to do. And if you also want to write something in your rectangular, you come to this style, text, and write, oh, you might write points of interest. For example, you write point of interest, and it will show exactly in between the rectangle. Or if you want to take it down below, which is the bottom, you can take it down below because you don't want to interrupt it. Or if you want to push it to the left side, so it comes to the left side. Or if you want to push it to the right side, it comes exactly to the right side. So it will not distract or make you feel that, okay, this thing is blocking my ways. So coming to this call out again, sorry, not call out, actually we are on these shapes, right? So we have rotated rectangle. Okay, so most of you might not be interested in using this rotated rectangle, but I think it is kind of beneficial. Yeah, like for me it is kind of beneficial. Let's say I spot I spot a zone which is here, and I want to use it for as my maybe supply zones. So this is how I use it. So sometimes it rotates. This is why it is called rotated rectangular. So you can rotate it. Then if you want the rectangular to be straight, just click shift on your you just click shift on your on your keyboard. Then it keeps it steady. It will not rotate again. Then if you want it to rotate, then you will leave the shift and rotate it to any degree you want to rotate it to. Otherwise you delete it. And you can also change the color. Okay, changing color is not hard. You can change the color using this color, or you change the color using this. You can also change the line colors. Let's say I want to change the line color to red. You see how it is? So I'll change the line color to red. Otherwise I'll leave it as black. Then I'll cancel. So under that, the same shapes, we have the cycle shape, and this is how I use my cycle shape, nothing more. So sometimes I also use my cycle shape for highlighting a zone that have just done something significant. So something like this, or maybe I'll just highlight a zone on its own that looks like this, or like this. Okay, so at that point I'm literally using them to to remember that okay, something significantly happened here, and it liquidated us, right? And I'll just have something like this. This was the liquidity as well that was taken. So I'll get to just place those cycles there so that I'll know exactly that this market liquidated me in this zone, or there was a liquidation that caused the market to start going high. So this is why I use my cycle. So coming back to that same shape again, we have the parts. So this is one of the tools I like using for illustration whenever I'm teaching my students. So sometimes I like to draw, then maybe I might draw a trend, then trying to show them something that they might love to see from the diagram. So sometimes I also add my lines to let them know that okay, this is a breakout structure and this is the continuation point. So sometimes I'll just combine my rectangle to show them that okay, the market um is gonna stop here and take it off from here. Then I'll still draw my two again, bring it here for continuation. So this is how I use my paths, how I use my trend lines, how I use my rotated angles. So if you look at these places, you see the two I use only. Though there are many tools here, I don't use all these two. I don't use all of them. This is the two I use, starting from the vertical line, the short position, the arrow, the dot, the test, the horizontal rail, the gun box, the rectangle, the price range, the Fibonacci retracement, the curve. So sometimes I use curve to just project whatsoever I think that might happen in future according to my strategy. I'll just use it to say, okay, market is going to go high from here. So you're just projecting, you don't know yet. So sometimes you say, okay, the market will just come down below before going up. So yeah. So I'll be ending my video now. And please, if there is anything you want us to speak on related to trading or anything you feel like you want us